Welcome back to another video of the Chocolate Stocks, where we discuss trading strategy, due diligence, and technical analysis on individual stocks as well as the market in general. And if this is your first time at the channel, please do me a favor and hit that like and subscribe button. It doesn't hurt you, but it sure helps us. Last but not least, I am not a financial advisor, and this is not financial advice. Let's get into the video. And guys, first off, before I start, let's cue the music. All right. So, I think that we need to have a therapy session part 2. And so, guys, today was a bloody day. It was blood in the water everywhere. Not much was happening. You saw your portfolios decline. And I just want you to know, guys, that I am here with you. I feel it too. So the portfolio that I'm showing publicly is bloody. It's very bloody. I mean, started today at 3,600, ended today at 31, lost $500 today, 13% down. It's even worse for the week. For the week, here on March 20th, I was at 4,300. Okay, even further than that, 46 on the 18th. I mean, guys, it's just been bad, you know, and it ain't like the type of plays we're getting in is not going to do well or anything like that. It's just one of those bear markets. It is one of those times where the market just kind of resets itself, and the ones who come out on top after this are the ones who are not emotionally attached to these losses. And I'm going through it with you. Do I sit here and act like it doesn't hurt me to see all of my gains just disappear in front of my eyes? No, it hurts. It hurts. It's like, sell. Come on, what am I doing? You don't want to buy high and sell low, okay? If your play was up before, your play will be back up again at some point. You don't have to be emotionally attached to it. But what I did do is I did take this opportunity to load up on some plays. One in particular is Dare Bioscience. And I did end up increasing my position. Even though I'm down, it came below where I thought it would be at 197. I loaded up. I'm at 130 shares of this. I loaded up on this play. But what I want to show you also, guys, is that this is the S&P 500. This is the standard bearer for the market. As it goes, so does the market. And you'll see a reoccurring theme as we go through the chart. This gigantic sell-off towards the last fourth of the day. Oh man, it hurts. It hurts, you know. So I want you to know, guys, that it's going to be okay. You know, what you do now will come back to play in the days to come. When that day will be, I don't know. And I don't have the answer, Sway, but I do know it will be an answer. So let's get into our plays for the week, see how they did. If you're following along week to week with us, you know that we give you a play on Sunday. We follow it throughout the week, see if it comes to the sweet spot. Here it is Sunday night, Monday, Tuesday. Here's today on Wednesday, down to 935. What was the sweet spot? Under $10. It came to you. So let's look at Inseego, INSG. All right. Wrong one. INSG. All right, there we go. Right one. Okay. So again, doesn't it look like the S&P? Just steady bleed off. Got your gift. Again, in the previous videos, I challenged you guys, if you're getting in on this play, to post in the comments how cheap you can get it. I'm already was in on the play at 989. It went below where I got it, so I did average down. I did add to my position. That's in another portfolio. I will show you that, but that is a little more personal. A lot more money is in that one. I don't want to That's not the public one. I want you to grow with the portfolio I'm showing you here, because this is the one I am, adding to as if, a first time investor would. So I want you to see how these picks grow with first time investors. So that's what I'm doing with this channel. This is the journey. This is a marathon, not a sprint. So in Seago, you got your gift. If you was able to get in today, and we're going to take profits at 20. All right. Next, we got on the list Palantir. Here we go. Sunday night, 24.40. Monday, 24.18. Tuesday, 23.21. Today, 21.93. I gave you these plays because both of these plays are double up plays. We're gonna double up our money in both of these plays, buying in at these levels. I mean, oh my God, $21 for Palantir. So let's look at Palantir, PLTR, and Palantir again looks just like the rest of the market, just sold off for the entire day, hit a bottom of 21.75. But I want to show you Palantir on another level too, because here's a peak way back on January 27th of $45. Would you buy in at $21 if you knew you can at least make, you could at least sell it at 42? Would you buy in at 21? You should. So when I give you these sweet spots, that's what it's about. Also, just to convince you that you should be bullish on Palantir, I pull up fintel.io, which is public information of all of these publicly traded stocks. You can find short volume ratios and short share availability. It tracks institutional shares. Everything you want to know about a stock, here's where you can get some due diligence done. And I want to show you this institutional ownership, because they have to report this, right? Now, you see some people in green, you see some people in red, you see some white. These are all big time hedge funds and institutionals and institutional buyers. The ones in red left their position. The ones in green are people who bought in for the first time. Okay? They bought in for the first time on 3/1. All this is on March 1st, March 2nd, March 10th, March 22nd. The big dogs are loading up on Palantir. Okay? I think if the big dogs are loading up, well, you might want to think about it too. I'm just saying. Just I'm not a financial advisor. Just looking at the due diligence. What was the sweet spot? Under $24. We're already there, past it. It blew past my expectations. Again, when I gave this play, I didn't expect a middle of the week correction out of nowhere. But hey, we was on the bull run, and now we're on the sell-off. I don't, looking at the broader market, I still see some downside to Palantir. Actually, looking here where it's at right now, I can totally see it coming back to, maybe $20. I don't think we're out of this yet. If we go back to the S&P, I don't even think we're out of this this so-called correction yet. I still see it. This can go one of two ways. I can see us hitting a double bottom here, which on the hopeful side, I will say, okay, maybe we're at support. Here it is. It was a resistance here. We broke through. And this long candle wick was a support level, but you really can't count that. So that's not a strong support. It really hasn't been tested, but once here, maybe a little bit there. Maybe it might be something to pay attention to. It bounced a couple times. So where we're at right now could be, but it don't really look like a long-term option of support. And if that's the case, we got a lot more downside if we break this level of support that is currently fragile. I can theoretically see an S&P 500 going back to 385, 384. which is only a couple dollars by this standard, but that is huge by the market standards. So we could see another 8 to 10% loss on our plays, and that's going to be a recurring theme. So we got to ride the wave. This is Black Friday again. Hey, if you got some money to buy, or you can pivot. If you're not down a lot in some plays, this might be the time to do so. Again, Palantir's below the sweet spot. We're taking profits at 44 when it rebounds. Anybody green today? Yeah, it was some people green. Not much, but it was some people. Coca-Cola 2 days in a row green. Both days was red. Coca-Cola's green both days. Banking sector. Again, I told you in previous videos, banking sector is outperforming the market. And then, your stable plays, those is what's green. I checked the market. That's pretty much what's green outside of some, bio pharma tech plays, but I don't know too much about them, but I'm just saying, pay attention to this. All right. Now, I did give you these plays before. These are things that I did just to give you an update on my moves for today. Everything in white I didn't touch. Everything in green I bought more of. Everything in blue I haven't given you specifically, but I bought in or added to. And this one here in pink, APTX, is something I'm looking to get into next. So I loaded up on there. I showed you that earlier in the video. I did buy some more MVIS. I've been pumping my chest about it. It came back below where I got it at. Rinse and repeat. I sold some in the strength. I used that as dry powder to get into Charge Point and then BNGO. It came back below where I got it. I'm just loading up some more because I know it's going to run right back up. You check the previous videos, MVIS was up at least $200 for me on a couple occasions. You sell into strength, it comes back, you buy some more, you sell it back into strength, rinse, repeat. That's what we're doing. That's how I was able to expand these plays, and that is the formula to dominating a market that is tug of war like that, right? So you take from the plays that you're getting. Don't be afraid to sell. And that's something I learned too, and I'm trying to tell you too. Don't be afraid to sell high, because that's how you make your money. The name of the game is to make money. All right, guys, we got the YOLO stocks update, and all by the Jordan crying face says it all. Because I have people who actually know me and know me personally and actually rely on the information I tell them, I'm going to be totally honest with you on this channel, so you can trust the information I say based on my beliefs. I'm not a financial advisor, but I am still holding, I will say this before I finish, I am still holding a position on GameStop and AMC. Full disclosure, it is totally with house money. I took out my original investment a while ago, but also I sold off some more today, because I'm gonna tell you right now, if you're not down on these plays, you should take your profits. You should do not go down with the ship. Okay? If you're up at any point on these plays right now, do not go down with the ship, okay? Wait for it to find a bottom and then get back in, because I'm telling you, just based off what I've been seeing in the market and just what I believe, this is no longer a fight that apes, quote unquote, are doing. Okay, we're not fighting the hedges anymore. It's not retail investors versus the hedges anymore. This is now a fight of hedges versus hedges. We're just along for the ride. So unless you want to go on that roller coaster all the way down and bag, hold, and wait, don't go down with the ship. Okay? Don't go down with the ship. Pull your money out while you still up. Wait for it to find a bottom and get back in there. Okay? And then ride it back up. If you played it right, and I didn't play it right the first time, I bag held with diamond hands on the first time around. It dropped all the way down, and we thought it was dead in the water for like 3 weeks, and then it shot back up. This time I took profits because it's going back down. and it goes back down. This time, it's like any other stock. You rinse and repeat, just on a bigger level. It's going to find another bottom. I know it's going to come back lower than where I got it. That's why I jumped out. Okay, you gotta. The name of the game is to make money. Okay, the name of the game is to make money. It's okay to take your profits. Your little 30 shares or 100 shares or whatever you got is not going to help in the grand scheme of things anymore, because we already did the dirty work. We already put the things in motion. It's now hedgies. Look at the volume on calls and puts on these stocks. You don't have the money to do that. Okay, this is not your fight. So your job right now and my job right now is to make as much money off this movement as we can. So right now it's going down. Get your money, get out, wait for it to find the bottom, because it's going back up. The chart tells me that. So let's go to AMC. Okay, look at this. This is apes. Okay, this is hedge funds. Apes, hedge funds, smart money. Okay, we ran this up, okay? But the smart money wasn't gonna touch that. No. They want sustainability. So I totally 100% believe that this is manipulation to get them back in at a better cost dollar average since this first run up here, okay? So once that finds a bottom, and once the market finds a bottom, this is going to run again. That's when you jump back in again. We got to play it with strategy, family. All right. Same thing with GameStop. Look at this. Does it look the same? It does. Apes, hedgies. Apes, hedgies. Okay. They're going to make sure that it goes in stair steps the way that they're able to maneuver it and really get the most out of this happening. Look at the indicators. So the RSI is way oversold. The MACD is extremely tight, especially right up in here. But it's getting to oversold territory. A bounce is coming, but it has to find a bottom first. You do not want to be on the falling knife. Do not be on the falling knife, and do not go down with the ship. Okay, that is my YOLO stock update. I appreciate you sticking around for the whole video, and if you like what you hear, please do me one favor: hit that like and subscribe button. It doesn't hurt you, but it sure helps us. In the meantime, I'll catch you in the next video. Peace.